Hello everyone, my name is Kaseem. Welcome to the $1 Million Challenge. In today's video, we are going to do a deep dive into JPMorgan. JPMorgan Chase is a bank. We all know them on our streets. They are actually a global bank and they're into a lot of things. And the stock has gone down enough to a point where I decide to buy a little bit more. Now, I own a tiny little bit of JPMorgan. I've just decided to buy a little bit more just because the stock it's actually down a lot at the moment. So I did a video like this before with T.Rowe price. Check out that video. It's pretty good. It gives you a lot of great information and very much in depth. That is the same format that I'm going to use here with JPMorgan. We're just going to dive right into it. So let's get into it. The first thing that we want to do is I want to pull up JPMorgan's website so we can take a quick look at what they are about. So there's the company here. You can see what they're about. You can read up on all their details, but I would say go to their website, jpmorgan.com/global. Links will be below, right below the like button. You can get to see all the kind of things that they're into. Obviously, ESG is the way to go right now. They have news articles on the company, and the main thing that I always like to look at is where are these companies located in the world. Now, you guys notice this is the second financial related companies that I've been buying lately. I like the finance sector. I like the tech sector. But right now I'm currently buying finance. So I did T.Rowe price previously. That's finance. And then JPMorgan is also into finance. There's a few more stocks a few more companies that I'm looking to buy, which I'm going to bring to you in a little bit. But with JPMorgan, you can see that in America, in the Americas, they have offices in all these countries. So you can click on them and read more deeply into their office and what they do there. In Asia, they have all these countries that they are in, and they work in those countries. In Europe, here are some of the companies that they're working in. So they are really truly global companies. They even have some place in Middle East and Africa. They're in Nigeria, they're in Egypt, Saudi Arabia, South Africa. You know, the usuals. They basically let you know that they are a truly global company. Now you can read up on the company here. I'd just like to show you how big the company is. When I do stuff like this, obviously you can go to About Us to be able to read more. That page will bring you to this page, and you can read more about, you know, all the things that they're up to, everything like that. So the next thing that we're going to look at here, which it's very important that I always like to look at, is how big is what they are doing. For example, let's take a quick look here. Total revenue that they bring in is $119 billion. Net income is $29 billion, and this for 2020. We're going to go into a more recent price. I just want to show you some of the basic stats that they have here. Total assets is 3.684 trillion. Mind blowing, you know, mind blowing. Over $500 billion worth of asset. Total equity. So you see it right here. This is the thing that is important to me, because with finance companies like banks and, you know, real estate companies and all those things, especially like companies like banks that they're into finance, where they make their money is their total AUM, total asset under management. They collect fees off of all this asset that they're managing. Okay, so that is what adds up to this 119 billion in fees. It's pretty good, right? Total client assets is over 4 trillion. It's pretty big. The mortgages that they've issued, 113 trillion. It's pretty good too. Over 260,000 employees, and they have over 4,000 branches. Amazing. So this is great stats so far. Now, I showed you guys this website previously. This is called qualtron.com. It's a website by a YouTuber, Joseph Carlson, a really good YouTuber. You should check him out. And it's a paid service, so I'm paying to be able to access this information. This is part of his Patreon, but I really love using this. It's just everything that you need to analyze a company is just in one spot, and I really like that. So we take a look at the PE here. It's not too bad, 12 or 13, not too bad. I mean, it's not too bad in my opinion. I may be wrong, but it's not too bad. Let's take a look at the revenue. Look at the revenue going up. In 2021, they made 121 billion, and this is annual. This annually, 121 billion dollars. In 2020, they made 119 billion. The earnings before tax obviously dropped during COVID because people were not paying mortgage and they were not doing all those things, so their earnings dropped. And they had all this moratorium and all these things like that. So people didn't pay their mortgage during COVID. And it's looked like it's bouncing back now in 2021. Let's take a quick look at quarterlies. It went up and then start dropping back down again. But annually, it looks like we are on the right trend here. Their free cash flow is up, 78 billion in free cash flow. And the net income here in 2021 is $48.33 billion, which is good. A lot of good numbers so far. A lot of good numbers. 48.3 billion. And if we take a look at the debt is going down slowly, which is good. I always like when companies are paying their debt. It's less risky when companies don't have a lot of debt, and then here from 2020 to 21, the debt has increased a little bit. All in all, it's been going down lately, and I understand why the debt has gone up a little bit from 2020 to 2019, because they didn't have much income and they had to cover expenses from somewhere, so they had to take a little bit of debt to cover those expenses, most likely. That's what I'm thinking, just looking at this information here. But it's okay. I think it's one of those things that they can manage. If you take a quick look up here, you can see that the net asset, basically, if you take their cash and you take the debt out of it, the net asset that is available right here, it's over $500 million. So this company, they have a lot of money. Even they can decide to pay off all their debt right now, and it still won't be a problem. Their cash flow right here from 2019 has been slowly going back up. Over 714 billion in 21 in cash flow. Take a look at the dividend here. In 2010 they cut it. I don't know if they did a stock split. I wasn't investing then. So if you take a quick look at the dividend here, the dividend has been steadily going up. Okay, we're investing in companies that are going to pay us out of their paycheck. And as investors, this is where we get paid, right? We get paid off of the dividend. And in 2022, they're going to pay $1 annually per share. So if you own 100 shares, you're going to get $100 for the whole year of 2022. So last year was $1. The year before it was 90 cents. So they've raised their dividend by 10 cents. Not too much, but they raised it a little bit. EPS, earnings per share. So every single stocks that is out there, what's the earnings per every single share? You can see that it's been going up. So that's very good. And if you take a look at their shares as outstanding, these are current. Basically, as this is going down, it just means that the company buys its own share. So every single share that you have it's more valuable. This is really good. Like, I really love the software for doing research on companies. So if you haven't set up yours, you should set it up. It's $10 a month. It's really cheap. You know, I can tell that the guy did a lot of work in getting this information out. This is crucial information. So you should set this up for yourself. And the guy also has it has a community on Discord and everything like that. Even though I'm not that active on it, I'm busy with my things here. But this tool is crucial, is amazing. Anyways, let me stop ranting about how good this tool is. Yeah, so right here, you can see the stock price right here. The stock price is currently at $135. Very cheap in my opinion. It's not so expensive. It used to be, basically, I would say the average hovers around this price. So anywhere from 160 to 170. That's the average until recently. That's gone down. It's gone down a lot recently. So, like, let's see how much it's gone down by. So there's another tool here that he recently added, which is really good. Again, it's really good. This guy is giving a lot of value. You should set up yours. You should set it up. It's $10. It's not a lot of money. Anyways, so right here you can see that JPMorgan is way lower than the 200-day moving average. And this is just a technical term, okay? If you trade, you know what I'm talking about. When a stock it's below the 200 moving average, it's usually a good time to buy. Now, this tool here that I'm using, the website, it lets you're able to see the percentages of how low those stocks are down by. So right now, JPMorgan is down 15% below the 200-day moving average. Very, very good. Even if you look at Facebook here, Facebook is down almost 40% below the moving average. So Facebook, I'll do a deep dive into Facebook too. But like JPMorgan here, 15%. I love the fact that they pay dividend. I would have purchased Facebook if they paid dividend, but there's no dividend. So I'd rather be earning a little bit of money while I pick up the stock on the cheap. So for the people that are more traders, that they like the technical aspect of things, this is what it means by when the stock is below the moving average, okay? This orange line here, as you guys can see right here, this is the 200-day moving average. So that means the price for the past 200 days, how far is the current price from the average price if we look at a 200-day period? That is what that means. And you can see that JPMorgan is currently at this point right here. Basically, how much is it? It's $129.21 right now. So it's 15% below the moving average. So this is like deep discount territory here. This is very, 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 very discounted stock. And then the blue one here, this is the 100-day moving average. Guys, you can see right here, and it's pretty good. Let's take a look at the volume of sale today. 1.3 million shares got traded today, and it's basically in the red. So it's a high volume. People are selling, and I want to jump in and be able to capture this opportunity and buy a little bit more of the stock. So obviously this is a good time to buy. Look at the whole market today. The whole market, everywhere you go, you're not escaping it. Everything is down apart from oil. We all know why that's going on. We have this whole situation in the Middle East. So all that stuff is disrupting the market. But at the end of the day, what's going on is really sad, but it's not going to affect JPMorgan's business. Their business will still keep on going. A lot of other things might affect their business, like, interest rate, what the Fed is doing, all this thing, prices of oil, but their core business, fundamental core business in managing money, I don't think that's gonna be affected. So that's why I'm gonna jump in and buy a little bit more. And as you guys can see today, the whole sector is basically beaten down today. If you take a look, the whole sector is beaten down. But JPMorgan is down. It's not too bad. Bank of America is even down more. Wells Fargo is down more. Citigroup is not doing too bad. But yeah, I'll jump in and buy a little bit of JPMorgan. Just before I get into the financial section of this video, this is not financial advice. You know, whenever I'm showing my personal portfolio, I'm putting it out there, I always like to let you guys know, this is not financial advice. It's for educational purposes. So you can see how other people are managing their portfolio and be able to gain some knowledge and do your own research to further that. So it's for educational purposes. Let's get right into the video. So let's get into it here. This is my current position for JPMorgan, and currently have $425 worth of stock value in there. Made $100, 38%. Market gain has been 80. Dividend has been 19. Now I haven't really built that much on this position, so I'm going to be looking to use this opportunity with the downturn of the stock to build the position here. And as you guys can see, I have 200 pending buying $200 worth of the stock, and it's currently $129, so which is a good buy. So I should be picking up 1.5, almost 2 shares here, adding that to what I have. So we'll be looking to buy some more, because I think this is a buying opportunity for a company like JPMorgan. They're making a ton of money, as you guys see in the previous section. They're making a lot of money, and I think they are going to do well over time. And this whole geopolitical thing that's happening is just, you know, macroeconomic stuff. Like, nobody can help it. They can't help it. We can't help it. And the market is giving us a nice opportunity here, like 15% discount from the previous high. So I'm looking to jump into this, and yeah, that's pretty much it. So that is pretty much it with this video. I hope you find this video insightful and informative. If you do, please subscribe to the channel. I do videos like this of stocks that I'm buying. I do a deep dive into it to show how I like to look at companies, and, you know, share with you some of the tools that I use, because some of these tools are actually very, very nice. Qualcomm is very nice. Hyperchart is very nice. They help you see things better when it comes to the market. So I urge you to go ahead and look for those tools and use them as well. So thank you very much for watching. I appreciate you for watching. If you like this content, please give the channel a sub. Like I said, until next time, see you later. Love you all. Bye.